The Dow Jones is now 5% lower than its recent high of 39,862 last month, and the S&P 500 is getting close to a 5% sell-off from its recent high, and it's now about 4.5% lower than its all-time high. This happens as Jerome Powell yesterday in some remarks said that pretty much dialed back rate cut expectations, saying that the progress we saw in terms of inflation is strong, and it might take longer to get to that 2% level, so rates might have to be higher for longer, and that's causing markets to sell off further today. Some of what he said is because we had another month of hotter than expected inflation readings since last Fed meeting, but I think there was another reason for the remarks. I think besides pretty much admitting that the truth that inflation is still hot, I think the fact that the reason why the Fed changed their tune from the last Fed meeting is that by admitting the truth, they want to create basically the stock market too much. Financial conditions have been easing too much, and the stock markets have been up so strongly since October of last year. And by making these hawkish comments, I think the Federal Reserve and Jerome Powell wanted to, pretty much tighten financial conditions a little bit. And I'm not sure if intentionally wanted to create a sell-off in the stock market, but those hawkish remarks pretty much led to a greater sell-off in the markets. And by doing that, I think they'll achieve an outcome of there might be lower inflation for the month of April due to the demand destruction. And I think the month-over-month gain for next month's CPI from March to April might be lower because of that. And if they create this little sell-off that we're seeing now, and if it goes further, that'll be good for April, as I previously mentioned, but it might even be good for May. So, and if that succeeds, then the Federal Reserve might be on pace to have multiple rate cuts this year after all. So I think that by the Fed's hawkish rhetoric recently might actually put them on path to deliver those rate cuts after all later this year, which would be good for the markets in the second half of this year. That's just my theory, but I'm curious to see how it plays out.